Okay, mate. So when do I think Rune will run? It's getting into the red 200 moving average and you're getting mixed signals. Yeah, well, there is mixed signals. That's true. Now, the overall pattern does look decent, but there is a little bit of mixed signals. So you pointed out very well, and you do this very well. It's great to be looking at these multi-time frames. So very well done on that. Keep up that good progress, because that is the right way to be analyzing things. So yeah, very well done. You can see now what I just want to point out here first. There is a drop off in volume here. The drop off in volume can be good, as long as the drop off in volume and then it increases again on the way back up, right? So you do want to see low volume down here. Ideally, you want to see this is fantastic. Actually, this is a good example. So look at this extremely low volume here, and look at the extremely low volume here. There was 2 times extremely low volume, and both of those were extremely important times in the market, right? So you can see this was very low. There was no more sellers, right? The volume is so low here that there was nobody to sell the market even lower. It's a beautiful, beautiful signal, and it's a thing that most people do not talk about and do not understand. Like we had 100 groups there throughout their time, or more than 100 groups, 200, 300 different groups in CryptoCheck. Those other paid groups. Not a single trader that I've ever seen in those groups or anything even has ever talked about low volume and properly in the correct manner. But low volume can be one of the most important things. Of course, high volume is also one of the most important things, of course, but high volume is easier to spot. But the low volume is equally as important as high volume. This told you that there's no sellers left in the market, and the market bottomed. Okay, so it's important. Why I'm saying that is because, well, there is slightly low volume. I know we have 3 days left. It's not crazy low volume yet, but it is the lowest volume that we've had in a while. Okay, that's why I'm kind of pointing it out. You can see, there it is there. So it's on par with here, but there's 3 days left. So what I'm trying to suggest as well is that maybe next week might be even lower volume again, because there is that slight trend at the moment of the volume declining. Okay, so if we continue to get low volume here, we might have to wait and look for and spot that very, very low volume bar. You only need one of them. One of them is probably good enough, maybe 2, but one of them is good, because what it does is it almost acts like a doji, right? And a doji, there's one right here. Look at this. So it almost acts like a doji in the fact that it's easy to break above the volume, and when it's easy to break above the doji and run, because if you break above it, the market is more free to run. It's a lot harder to break above a big red candle, for example. Okay, so when you have a doji, if price breaks out above it, the buyers can get behind that, and then it can be a self-perpetuating move to the upside. People see it breaking out above the doji, people see the doji, people start buying, and then the buying pressure continues, and then all of a sudden this becomes support, and you drop back into the doji and you support, and then you run higher again. But the doji is almost like a low volume candle. It wasn't in this one. This is a high volume candle actually on this doji, but some dojis are low volume candles, but they represent a similar sort of aspect in the market where you can break out above them easy. And if you get a low volume candle like right here, you can easily break above it, and it's telling you. Look, I'm going to zoom into this actually, because it's important. And so right here, look at this red candle. So right here, if you draw a line on there, and you can even draw a line on the green one, even lower again. So you can draw 2 lines on that, and your first one is, okay, the price is trying to break out, and the second one break above it, and it's confirmation. So if I draw that, tighten that up there, it's so refined that it's hard to even draw it there on this window. But so as soon as you break above here, you're breaking above the low volume, right? And there's no sellers left. The market is understanding, at least the institutions and the people in the know are understanding, that this is a legitimate breakout, because there's no sellers left. If there's no sellers left in the order book, well, price can run. How do you know there's no sellers in the order book? Because there's no sellers here. Look at this. There is no volume. and price has already got above these sellers, right? So there is no more sellers. And then that opens the door for the price to move. And it opens the door for the bulls to take over the trend. And it's no coincidence that this low volume started off this massive trend. Why? Because this is a safe buy for institutions. They get alerted for very low volume, because when you have very low volume, it means that you can have a safe trade. It means that you break out above this and price is easily going to run because there's no volume. Low volume can create volatility. Low volume can create propulsion to the upside if you have significant buyers. So that's why there's a lot of volume here. The lot of volume here is not here just for a coincidence. The lot of volume here and the volume breakout is all because of these two candles of low volume. It allowed them a safe entry into the market. The low volume allowed them a safe entry into the market. And that started off the trend. That created breakout volume. And when you get breakout volume, then the market gets behind it and you can continue to move higher. Now, don't get me wrong. They could have kept buying this market because they could have realized they're in control of the market and they already have a good entry point. And then they probably sold into this peak here, which is above the first peak. And then you get this huge volume. You can see the relationship in the volumes. Now, I'm on this topic. I'm just going to continue. And I might actually just even put this video in the low education section, low volume section in the education section, just because there's probably not a lot of content in there, and I probably should put more in there. Here's another one, right? So you're in this bull trend, but look at the very extremely low volume here, right? So the market is topping. The market did dip below that because you're in the downtrend, but you created this small candle. But once price gets above here, it's no coincidence that this was a parabolic move. It's a parabolic move because of the low volume. Because essentially they can fill and buy as much as they can here because they realize that there's no volume and they have control of the market, and the market can move sharply higher. So they bought with as much as they could probably buy in the moment. The volume is not monstrous here or anything, but there probably wasn't enough to get filled. But they continued to buy this, and the price was propelled to the upside because there was no sellers, because there was a low volume there. Now there's one more here I'm just going to look at. Okay, now this is, in hindsight, of course, it's easier. This was a new coin. This is a weekly chart, so I'd need to break this down to a daily chart to actually see it. But you can see that there's a very low volume. But when you break out above this low volume, now again, maybe there was not enough sellers here to continue to push that price lower. So you got that little bit lower, but then there was a bullish stop hunt. There was no sellers left. And this low volume was telling you that hold on a minute, there's not that many sellers here. And then they bought it right back up. And as soon as you get above here on the low volume, like that's one of the lowest volumes on the entire chart. It's up there. It's not the lowest. Anyway, yeah, sorry for the long video, but I think it's important to go over those things at times. It's not every video you get a chance to talk about them. In the meantime, there is a bearish weekly stop hunt here on Rune. So technically now, yeah, it is bearish below there in the near term, right there, and there may be a flush down to kind of fill here, finding its bottom or whatever before getting the real move up. Also, in the meantime, as we talked about, and probably the topic of this video is the low volume, because this volume is dropping. It has been dropping since up here, and actually, when we look at the sentiment on the new indicator, this has been dropping. It's not been strong. It's been dropping, and it is actually coming into the red criteria here. So it is telling you to be careful in the near term, as there may be a little bit of downside. But we need to watch this development. Now, I have my indicator set on 35 currently. If I'm looking for fast signals, I like to set it on 20. 35 is a good neutral, and then you can, as you're going higher, you obviously can put that up there to. Well, you can go to. I like to go to 70 and then 100. So I like checking them all, 50, 70, 100, and trying to see. Like you can see where you start to break out here, and that's pretty clear why you started to break out here. I mean, look at the bear market, and then actually a huge breakout in volume there as well. but the whole that whole move, you know, it's turned into a bullish move. All the indicators and all started flipping bullish. But the weekly sentiment is declining here, but it doesn't mean that it can't come back up, but it is still declining, so it's good to keep that into consideration. As long as you're red on the week, on the quarter, right? This is red on the quarter, then it's still is considered bearish below here. There is that bearish weekly stop on also. However, when you get patterns like this, often you get that move up, right? Very often, because this is a nice reversal. Price is bullish above this line down here. This is just creating the base before the breakup. In theory, is it going to wait until the new quarter? I'm not sure yet. It needs a little bit more investigation, but these moves usually result in more upside. So meaning that the dips here or wherever it is should be buying opportunities. Now, if this holds true, this candle holds true to the next month, well, next month looks like a great buy, right? If it continues to chop and consolidate here and closes like this, I don't know if it is yet. There's 14 days left, but this then would open the door for a very, very nice move to the upside. It's looking bullish. It looks like a matter of time. When is it going to move? Not if. You know, I know that sometimes it's not good saying that in the market because the market can do anything, but it does look like it wants to do that. It looks like there should be more upside. So, but currently there is a bearish weekly stop on it. This is an inside bar on a 2 week, so there's 3 days left. So, you know, I would suggest at least probably waiting until a new 2 week, and possibly it could start running then. This is an inside bar, so if there's a small dip and a flip green, that is the time to get long on it on a new 2 week. This pattern and this structure here is a bullish structure. You failed massively to the downside, you negated that, and then you had inside consolidation, the dip into that bullish bar, you know, 30 to 50% of the way down or whatever. Well, that's more than 30 to 50, that's 30 to 50 there, but the dip down there was buy opportunities to then go higher because of this structure. But this inside bar on a 2 week candle is telling you, get prepared, there is a move coming. Now, it is very similar to the situation back here in a way where, you know, you get this tail candle and then you get the inside bar afterwards. The next candle was an up candle and you continue to consolidate and build this range before exploding up. Now, I don't know if we're going to continue to consolidate in the range, but it is suggesting that dips into this wick here do look pretty good at this current point in time, to be watching down in here for a buy, or you can wait until it pops up and flips green. And that's the way I would play it at the moment. If it drops and it's still weakness, you know, if you see weakness on the indicator and stuff like that on the smaller time frames, you know, you need to start watching that and see if it's going to continue to be weak and get a bigger drop. But if it's going to be super strong, well, then dips here should be bought up. And that's the way I would play it in the meantime. If it's looking weak when it does drop, well, you just let it go. The safe way to do it is to let it dip, pop up, flip green, buy, put your stop below the 2 week low, or some sort of pivot you've found in here. Anyway, mate, I hope this helps. I hope you're well. And 14-minute video, yeah, it was pretty long. I might actually add this to the low volume channel because I've been wanting to build that up in there as well.